I'm with Impact Investment Shujog, which is a not-for-profit social enterprise that's based in Singapore. We work regionally, and our mission is around helping to grow other social enterprises and deepen the ecosystem. And we do that through three interrelated objectives. The first is around magnifying the impact that social enterprises have, and there we do a lot around measurement. And in my presentation, I'll talk to you, and it's actually one of my key messages, is if you're a social enterprise, I think one of the distinguishing factors is that you are intently trying to create positive social and environmental impact. And as a result of that, you need to measure that. And that proof becomes quite important when you look at the flip side of the coin, which is impact investment. We also work around scaling the number of successful social enterprises that are growing. And there we run a very traditional sort of technical assistance program that's fully grant funded. And then we also look to broaden and deepen the knowledge base in the social finance space. And we do a lot of research, a fair amount of advocacy in terms of helping to increase awareness around social enterprises and their needs. The other organization that I have the honor to represent is called Asia Impact Investment Exchange. And that is a for-profit social enterprise that, if you think of social finance as a coin, where you have on one side social enterprises, the other side, for us, are impact investors. And it's the marrying of the two, which I think makes people very excited about this being a new alternative to achieving development in a sustainable and scalable way. And IIX, which is what we affectionately call Asia Impact Investment Exchange, really focuses on the deal making, the transactions. And they have a private placement platform with over 400 accredited investors from throughout Asia. I think, if I recall correctly, 90% of the investors who self-signed up onto the platform and are actively looking for social enterprises to invest in are Asia-based, which is unique. And if the PowerPoint doesn't come on, I'll talk to you a little bit about what we see in terms of Asia impact investors versus other impact investors in other parts of the world. And then also they have started the license for the very first social stock exchange where you can publicly list. It's co-located in Mauritius with the Mauritius Stock Exchange. And so it's really the sort of combination of growing social enterprises as well as stimulating impact investment deals, which are how the two organizations come together. Perfect timing. And so I took a slightly different approach to this topic, and so I hope you'll bear with me. I'll move fairly quickly through the initial slides because it strikes me that you're probably more interested in the latter ones. But because the title of this is around opportunities and strategies for the social enterprise sector to engage the business sector and capital markets, I actually thought about it as what are the different funding options that might be available to you as social enterprises.
The one there.
Oops. Okay, top.
No, the one below.
The bottom.
The bottom.
Okay, so sources of funding. So in our minds, obviously you have the traditional funding, you have governments, multilateral banks, you have private sector, corporate social responsibility, and you have pure grants. I think one of the things that we see as really exciting about social enterprises is that there's also that link up potential for impact investment. And that together, these are what we think comprise the social capital market. And so just to run through sort of the challenges or the advantages and disadvantages of working with bilateral and multilateral donors, obviously they give grants and investments, and free money is by far the best money you could ever get. And nobody's trying to do that. And I think the challenge is that they're often tied to their political objectives and strategic objectives. And so long as your social enterprise happens to coincide with what their objectives are for those 5 years, 7 years, 10 years, then you're in a very nice spot. If for whatever reason those strategic objectives change and you are now outside of that, it's actually quite difficult to attract that funding. And so it's where the confluence is, and which is wonderful, but if you happen to be outside of it, it's not that easy. Also, bilateral government donors and multilateral banks are large organizations. They're not nimble. They're not meant to be nimble. They're meant to be institutions that are going to be there for the long haul. It's not really a criticism of them as much as this is just an operational fact. And because they're large institutions, their funding amounts are quite substantial. So are they looking to make a $50,000 investment or a $50,000 grant? Not really. They're really looking to make a $5 million grant that might get sub-granted at a smaller level. But even that, $5 million to $50,000 if you're a social enterprise is a fairly large jump. And so I think that it's can be quite hard to connect up to these big donors if you're a smaller social enterprise. On philanthropy, grants are tied, I'm not sure why it's doing this, grants are tied to the interest areas of whoever happens to be giving it. So whether it's a foundation or if you're thinking of an individual, it's somehow personal to them or prescribed internally within the organization. And so once again, it's that confluence. So if your work happens to coincide or pull at the heartstrings of the philanthropists that you're looking for, then there's a real match. But if not, it's a very uphill battle to convince somebody to give to your organization, regardless of the good work that you're doing, if it just doesn't resonate with them. It's difficult to break in. Philanthropy, again, it's very personal. Especially if you're talking about at the individual level. If you're talking about foundations, it is hard. It can be quite a lot of work in terms of trying to write the right proposal that's going to hit the right notes that will resonate with the program officer for them to have that aha moment of, this is a great organization to support. And in the US, philanthropy is taking on this new approach where they're starting to think about program-related investments. And interestingly, in Singapore, there's an organization called the Asia Venture Philanthropy Network, AVPN, where they're really bringing together philanthropists and saying, how do you think about your philanthropy more strategically? So you start to think about social enterprises, you start to think about scaling, start to think about how do you come together as individual philanthropists that might be interested in education and the other one might be interested in the Philippines, and coming together to say, how can we pool our funding to make larger investments that are going to have a bigger systemic and sustained change. And I think it's quite an interesting model that's starting to get on. So in addition to bilateral donors and multilateral donors and philanthropists, another option is around corporate social responsibility. And I think it's so interesting because Simon was talking about this sort of operational-led sustainability approach to their business, which is incredible. And I think that it's quite distinct from corporate social responsibility, where a very common description of it is as a self-regulatory tool to achieve a balance of economic, environmental, and social obligations that the company feels. I think what's implicit in this definition is, what does the company define as their social, economic, and environmental obligations? And depending on the company, it makes a huge difference on whether they take that on as it's partly their responsibility or it's not. Shujog is doing a very interesting research piece for the Global Mechanism to the United Nations Convention to Combat Desertification, and we're talking with mining companies about how do they think about sustainable land management and what's their interaction and touch points with social enterprises. And you have this real distinction of some mining companies saying, we think about sustainable land management as an operational issue, that we want to integrate it into the way that we change how we do our business. And other ones are saying, well, no, we give a little bit of money here to a social enterprise that, helps to protect the orangutans, and we give a little bit of money here for some research, and they think of it more as a marketing. And I don't really mean to disparage corporate social responsibility, because I think it can be strategic, but it depends a lot on that company and how they define what they feel their obligations are. And these are just some existing corporate social responsibility models. Obviously, you can think of corporate social responsibility as philanthropy, you can think of it more as risk management, and you can think of it as value creation. This is really more to just give you an overview of, when you're thinking about what are the funding sources for my social enterprise, how do I grow, this is obviously a space in which you can participate. You just need to be thinking strategically about sort of where do you fall and who are you asking for money and how are you approaching them to ask for money in a way that they're going to say, this makes sense. And what I'd really like to spend the most time on is around impact investing and representing both IX and Shujog. This is where we see our sweet spot. And so for us, just so that we're all working off the same definition, we define impact investing as investments that are intended, and I think that that's incredibly important, it's intended to create positive social impact beyond financial return. And so, it's the provision of capital, and investments oftentimes, if you think about it in a traditional sense, you immediately think about risk and return. And I think that in Asia, the impact investors that we work with overwhelmingly think about risk, return, and impact, which is interesting because obviously from my accent, I'm American, and coming from the US and the impact investing space there, it's quite different. Impact investing in the US and in Western Europe as well, although in a slightly different way, has really been led by foundations and governments in Europe. And those organizations come at it with an impact-first mentality, and from that have said, wait a second, we can take things more strategically. As a result, what we're looking for in a financial return is slightly different. In Asia, the 400 accredited impact investors that we work with are high net worth individuals, are family offices, are some impact investment funds or value creation funds, and they look at financial return and impact very differently. And let me see if I can do this. So they are, coming in some ways more from a traditional investment background in terms of looking for enterprises that are going to be able to create some financial return. And their expectations of return are very different and are very individualized. And so you have some that are saying, I simply want to know that I'm going to get my principal back. So the money that I originally invest, I hope to get that back, whether it's 2 years down the road, 7 years down the road, or 10 years down the road. And you have others that are saying, well, wait a second. If you're saying this is an impact investment, I want a 5% return. I want a 5% return because I think that that's very low given the risk of this investment, and I want to know exactly what the impact is going to be. And so when you think, so when you think about impact investment and you think about the financial return, I think the other part of it is what is the impact? And what we're finding is that impact investors are becoming more sophisticated and are starting to move beyond the story that's been told. The anecdote of sort of who you're helping and how that's working is still important to entice an impact investor to even consider your social enterprise and consider investing in it. But now they're starting to look at it and say, well, I want to know, what are the outputs? What kind of indicators are you using to measure that? What's your expected outcome and how are you planning to do that? And they're starting to change the language that they use to become a little bit more like development speak. I mean, it's certainly not fully there, and it certainly varies depending on the investor, but you are starting to see more investors saying, I want to know, I want to verify what the impact is. And so when I was listening to Chu, and one of the things that I noted from his slides was around validating effectiveness. And I think that that's another way of saying, how do you measure your impact? How do you monitor it? How do we know that there's proof in this? And that, as there's more and more impact investment transactions that are happening, I think that becomes more important because it's going to quiet the skeptics out there. It's going to quiet the skeptics out there about, are social enterprises real? Are they actually producing impact? Or is this just another way of defining charity? So I thought that it'd be helpful if you haven't seen this slide already, although I know that it's used or touted quite a lot. But I thought it'd be interesting for you to know what the potential market size for this is. So you have 56 trillion, this was done by JP Morgan, not us, just to be clear. So you have 56 trillion in globally managed assets. You have about 20 trillion that's estimated, this is up to in 2030, or expected out into 2030, 20 trillion in an ESG focus investment. You have 7 trillion for socially responsible investment, and 1 trillion that's estimated by 2030 for impact investing. And if you don't know what these distinctions are, let me be a little trite in summarizing it quickly. The largest circle is certainly just traditional investment. The green circle in the center there is around ESG. ESG, environmental, social, and governance reporting, is, probably the simplest, overly simplest way of saying this is it's a do no harm type of approach. So I am going to look at the environmental, social, and governance at my investment and what that might do, and I'm going to say, here are some of the problems, and here's how I might mitigate them. Sometimes I'm just not going to mitigate them, but I at least acknowledge up front that this is some of the externality, positive or negative, that could be created as my investment. Socially responsible investing is oftentimes where investors will say, I refuse to support the alcohol industry. So none of my investments in my portfolio will support anything related to an alcohol value chain, or tobacco, for example, or weapons. And impact investing, again, is unique and is smaller because it's investors who are saying, I intently want to know and create positive social and environmental impact, as well as a financial return. And so you can see that the distinction is small, but as a result of that, you do see that the size of the potential for the market is small. Still estimated at 1 trillion, but smaller. And just as a point of comparison, you have venture philanthropy at 50 billion. So that's a huge jump from 1 trillion down to 50 billion. And then you have philanthropy in its traditional form at 310 billion globally. And so even if you were to add philanthropy and venture philanthropy, you still only come to 360 billion, which is a lot of money, but is dwarfed when you think about the potential of 1 trillion. And this is done in US dollars because it's JP Morgan. I mentioned this already, but I think that the visual is quite nice, that you have investors that are financial first, and you have investors that are impact first. They all fall within this impact investment square, but they are different. And so the type of social enterprise you have will make a difference in terms of your ability to attract different types of investors. And so one of the things that we find is important is knowing the investor base and knowing what they're looking for, because then the matchmaking between what the investors want and what your social enterprise can offer is a little bit easier. And just to give you some ideas of who are these impact investors. Some of them are private foundations, and so you have the Gates Foundation that is making program-related investments. Program-related investments is a U.S. tax term, and it has tax implications. But basically it means that they are making investments where they expect to receive a below-market return. They can do that using their grant money. Quite frankly, they can also do it using their balance sheet. Or their endowment, and so the Gates Foundation, for them to use their endowment, they're already investing their endowment, so their endowment continues to grow and get a market return. Now what the Gates Foundation is starting to say is, I can use my endowment to also support my social mission, which is a substantial amount of money. You have high net worth individuals and investor circles. Or investor circles, for example, is one that has facilitated the flow of 310 million. You have corporate foundations and CSR that are starting to move into this space. You have social venture funds like Acumen. You have hybrid organizations like the Omidyar Network. You have banks that are starting to do some structured debt instruments around impact investing. You have insurance companies that, again, are just starting to open up, but are more and more interested in it. I was recently in Paris talking with AXA, and AXA has created a fund using their own capital, and their intention is they're going to make some impact investments, see how their capital does, and then assuming it does well, they're going to take this and roll it out to their clients. So they're saying, let me use the money internally and then see where I can go with it, see if I can make it into a new product line that I can then engage other investors into. And then you clearly have the sort of money that everybody eyes go a little wacky over, because that's where you get the $1 trillion in impact investment. And that's the idea of how do you bring in pension funds? How do you bring in those institutional investors that have substantial capital and or have a long-term horizon? I mean, it's very hard if you're looking for short-term capital and you want to support younger or earlier stage social enterprises, because quite frankly, they need enough runway to be able to grow and to scale. I won't spend a lot of time on this, but I wasn't certain of the level of experience with investments, and so I thought I would just quickly list up there. There's, in the simplest of terms, two types of ways you can invest. There's equity, where the investor is taking a portion, an ownership position in your company, and the advantages to that is that they're oftentimes in it for the long haul, that they are taking an ownership position in your organization and they are not immediately looking for an exit. There's no repayment schedule that's going to put pressure on your working capital. And then there's debt, where you maintain complete ownership of your organization, but you have a certain amount of money that can come in as working capital that needs to be repaid on a predefined set schedule, and oftentimes has an interest rate related to it. There are certainly advantages and disadvantages to both. Impact investment really can take the form of both. I think if I had to say which way does it leans more toward equity than it does to debt, or a little bit more sophisticated models of your thinking, sort of convertible debt. So it comes in as a loan, and then if the company does well, at some point it converts into ownership shares. And I thought I would give you a case study about some social enterprises that have gone through this process of how do they attract impact investment. And so SUNY is a social enterprise that's based in Cambodia. And you can read up. It provides rural communities with affordable, renewable energy electricity. And its goal is to provide 20% of rural Cambodia with electricity within 5 years. Their process is that the SUNY and investors were introduced. They went through a variety of different rounds with investors in terms of doing an investor pitch. What that meant is that prior to even getting in front of investors, they had to have a good business plan in place. They needed to have a financial model. They needed to be able to talk to investors in an investor's language so that there would be a point where they would resonate. And then these are those are the steps that went through how do you get to an investor saying yes. And at this point, I believe they raised $2.5 million, or in the second round of raising $2.5 million. This is a little bit, I think it's just more illustrative, but you can see that there are 4, in their first tranche of funding that they raised, they had 4 high net worth individuals who are Singaporean coming together. And then they had an impact fund and a private equity fund that came in and made investments as well. So here are some other social enterprises. So Frontier Markets is a clean energy products company, and they raised $150,000. Their impact is around energy costs and their employment strategy and how they go about creating jobs. Spring Health is $380,000, and what they've achieved so far is that they have provided 38,000 people in 95 villages access to safe water and supporting 350,000 households. Arjuni is an interesting company. They're a social enterprise that's based in Cambodia, and they work with trafficked victims, and they provide them safe housing, social services, therapy, training, and employment in the company. And then they go out and help to provide these women an opportunity to cultivate their leadership skills by by going into villages and helping to organize women to I guess for lack of another word, a hair drive, where they cut the woman's hair and then the women are compensated for that, and that hair is then used for wigs that are exported mostly to the U.S., but a little bit now to Western Europe. And then the proceeds from the sale of those wigs get reinvested into helping more trafficking victims. They just raised, or they're about to, knock on wood, close a $400,000 loan. You have Aliyat Green, which is producing and selling organic palm sugar in Indonesia, and they have trained farmers and certified them in fair trade and organic processes, which has elevated their income considerably. And then Babosphere, which is here in the Philippines, is an interesting model because it's a training center that provides training for call centers. So it targets youth that have currently dropped out of high school and are trying to train them, and their model in terms of how they train them is quite interesting, because if you're an unemployed youth, you don't necessarily have the funding up front to say, I'm going to pay for the training. So rather it is a free training, and once they're placed, then there's a repayment schedule that kicks in, which allows them to really target these unemployed young people rather than people who are just looking for a career change. I mentioned this already, and I know I'm running over, so I'll go quickly. But what we find with investors that we work with is that they are interested in one of two things, and sometimes both. If you ask them, what do you want to invest in? They care about a sector. In India, if you are Indian American, if you are Indian British, or if you're Indian Singaporean, you invest in India. There's just, the affinity to your home country is very strong. And it's usually one of these two, sometimes both. And then the last thing I wanted to talk about, which touches a little bit on what Chu was saying about the Global SE Action Hub, and because it's a interesting sort of forerunner, or it has an interesting potential link to Impact Exchange, which is IIX's social stock exchange. And the idea of the social stock exchange is that it's going to allow retail investors, individuals, regular people like you and me, to participate as impact investors, to put our money where our values are. Because right now, if you look at the impact investing community, it's an elite club. It's high net worth individuals. It's people who have family offices, which mean you have a lot of money that you have to hire somebody to come manage your family's money. It's foundations, it's funds. The idea of a social stock exchange is that everybody can participate, and that you have different types of activities listed on the exchange that would facilitate everyday people to come and invest, just like a regular stock exchange. It's co-located with Mauritius, and it operates fully like an exchange. It's partly why it's located in Mauritius is that it's nicely situated between Africa and Asia. Also, the Mauritius Stock Exchange has lower entry requirements, which make it much easier for younger social enterprises to list. That being said, to be clear and fair, would it make economic sense for an early stage social enterprise to list on the stock exchange? Absolutely not. Absolutely. I mean, this is still something that's meant for larger organizations, in part because there's a fair amount of reporting that goes into it. There's a fair amount of transparency and due diligence and accounting that has to happen, as well as a track record. But that being said, the aspiration is that social enterprises can scale, will scale, and as they scale, this will be another tool to help move them to that next level, and to connect them with investors around the world who have the same requirements and values in terms of producing social and environmental impact. This just summarizes that. And so I won't go through this, although I'll leave it up there for you because I think I actually have talked about it, and it just gives you a few more examples of the different types of sources of funding that might be available to your social enterprises and different ways and different types of stakeholders in the business community that you could connect up to. But rather, I'll focus on the takeaway messages that Tess asked me for. And so I would think of three. The first is around how, if you are a social enterprise and you're looking to engage the business community, I think one of the things that you need to incorporate into your story is your potential for scale. How do you reach scale? That if you're small, it's an exciting story, but if you can't connect to how are you going to grow, how is your impact going to grow, it's going to be hard to capture a business's interest when businesses are about growing their market share, about growing their profitability, about extending their sales, extending their product. And so there needs to be more around how do you show that your social enterprise has that potential? What's the market opportunity and what's your trajectory to address that market opportunity? I think alongside that, there's two other parts to it. One is if you're looking for impact investment, you need to have the documents that impact investors are going to look for. They are going to look for a business plan. They're going to demand it. They're going to look for a financial model. They're going to want to see draft terms. And these are still investments in that way. I think also if you're looking for any type of funding, you need to start to think about how do you measure your impact. And I think that the monitoring and evaluation field is so hard because historically it's been dominated by academics who take a very rigorous approach to monitoring and evaluation, which is incredible and is valuable, but is oftentimes retrospective. And so there has to be a way to think about impact assessment and monitoring and evaluation in a more pragmatic way that fits with the needs of earlier stage social enterprises so that they can understand what their theory of change is, start to communicate it, know what the indicators are, and start to collect that data, even though they're just getting started. And I think that that's a space that at Shujog we're trying to address, but I think more people need to be in that same realm so that we can start to gather that data. Thank you very much.